right. Hello, everybody. It is March. It's March 3rd. It's Mark Newstater, eXp Realty, with another snowy weekly real estate update. We thought spring was here, but I think all of us on the screen have lived in Calgary long enough to know that is definitely not the case. Along with Jaden Bax, as always, from Avenue Financial, and a special guest today, Andrew Brandsma from Your Life Covered. Andrew, how are you?
I'm good, guys. Thanks for having me on. This is cool.
Yeah, no worries, no worries. So Andrew specializes in many things, one of which we want to talk about today is mortgage life insurance. So many people buying homes these days, Andrew, Jaden. So, I mean, really, this is more of a Jaden and Andrew conversation. I think I might even take myself off the screen. But
yeah, well, I'm going to jump in right off the bat.
Yes,
if you don't
please
mind,
do.
Mark, because Andrew does not work with mortgage life insurance. That's
Right.
a product that I will offer as part of my offer, but it's a very, very short-term product, right? Like that's something that I want to see my clients have kind of 30 to 90 days just to protect them while they're uncovered when they first buy their home, which Mark has put them into their perfect home.
Yes.
But once we get past that and they're into the home, either Mark or myself are going to introduce them to Andrew. And Andrew, tell them all about the incredible stuff you do with life insurance that is not tied to your mortgage.
Yeah, so this is probably my core group of clients. Because I have good mortgage broker connections like Jaden, they understand that the mortgage life insurance does have a purpose for a very short period of time. But where it gets really tricky and where it often falls apart is a couple of things. Traditionally, and still quite often, mortgage life insurance that you would get with your bank is underwritten at time of death. And that's very risky, not knowing that you're insured up front. And that, if you answered one of the 5 questions wrong or you forgot something, it could decline the coverage. And you just never want to have that lingering in your head when that happens. So, of course, when you pass away, it's not your problem. You won't know about it. But that's a legacy that you just maybe don't want to leave if and when you pass. The other thing is that long term, the rates that you can lock in with individual life insurance, you can get a 25-year term to cover your mortgage from start to finish, where the price doesn't go up every 5 years, or you've got your mortgage life insurance that's covering just the amount of your principal of your mortgage. Your premiums generally are staying the same, but the amount of your mortgage is going down every time you make a payment. And so the value that you think you're getting early on deteriorates really quickly. And so they generally run in 5-year cycles as well. So again, as you get older, sometimes the premiums are going up. With a term life insurance policy, it's locked in premium and a locked in face amount for the entire length of the term. So those are 2 of the really kind of big ones. And the other one is, things change quickly. And I'm a perfect example of that. Seems like every 4 or 5 years we're on the move. So I'm a great client for Mark and Jaden here probably at some point too. And that, you get up and you go, well, that mortgage life insurance that you have with a particular lender doesn't just follow along with you. You can't do that. So maybe if you port the mortgage or something like that, it might be able to follow you. But if you break your mortgage and you go get a different mortgage 4 or 5 years later because there's better rates and a better product, and Jaden says, yeah, go with this company, that life insurance is gone. And now you're 5 years older, your premiums are going to be more expensive. And your health may have changed, something as simple as an autoimmune disease or, a little scare with cancer, something that you're investigating that you're not sure what's going on. If you have to try to get insurance, any insurance at that point in time, you're kind of, you're too late or you're just going to pay a lot more. So those are the main ones. I think the main reasons to consider making that changeover to an individual life insurance product.
Cool. Awesome.
Yeah.
Andrew, thank you so much for joining us.
You're welcome.
What I'm going to do is when our live is done, I'm going to tag you in the post. And then if people want to reach out to you, they can do that. If you want, we can chat later about putting your work number in there as well if people want to see that. But thanks so much. Appreciate the info.
Yeah. Thanks for having me, guys. This was great.
No worries.
All right.
Talk soon. All right, so that was Andrew Brandsma of Your Life Covered. We want to introduce more of our pros people that we refer to in our network, because it's such a great resource for people to help our clients out. So with that, let's get to, we got a jam-packed day today, Jaden. So let's get right to the stats. Big swing. Big swing this week. I kind of wondered when this was coming, and we definitely saw a big swing this week. We went up to 642 new detached listings in the past week. That's that's over 200 up from last week. 200. So that's massive, and I thought this was going to happen, quite honestly. Sold's 495, pendings 326, so similar numbers to last week. Total of 821, so slightly down. But our net difference, look at that, 179. So that's a massive drop, swinging to the buyer's side. The momentum has swung over to the buyers this week. In reality, is that what's happening? We'll have to see. I think that's going to take a little time to flesh itself out. 127 price reductions. So of the 1,373 detached listings on the market, we had 127 price reductions. So percentages wise, that's down from last week for sure. But still a large number of price reductions. Total listings of 2,810. And then we're going to look at this week last year. We had a total number of sales this week last year of 534 to 844 this year. 919 new listings, 1337. So again, we're tightening that gap, right? Active listings also tightening up, 45.99 this time last year and 36.55. 992 pendings. That's just crazy talk. In the last week this year compared to about half of last year, less than half. And then our median price, I'm going to show you our monthly review from last month, and you'll see how the prices have jumped up here. So let's maybe go, actually, we'll go to your interest rates first, Jaden. Talk about the big news yesterday. I do want you to talk about the interest rate hike.
Yeah, so we saw, and I'm getting a lot of calls from clients who are tied into the adjustable variable product. So prime rate, the overnight rate is what we call it, went up last night from 0.25 to 0.5%, which is meant to jump in prime rate at all lenders. And so that doesn't happen automatically. Generally speaking, what happens is it was about a day later today. I've been getting a lot of emails from lenders with the notice of their prime rate going up. So their prime rate is tied to the overnight rate. And, a lot of people are worried because there's going to be a couple more rate rises this year. And so they're phoning me and talking about, well, is now the time to lock into fix? And it might be for you if you're getting very nervous about this. There's a possibility that it is, but I don't think that's necessarily the case for everybody. Those discounts are still great. Prime is 2.7% now instead of 2.45. I have clients who are locked in at prime minus 1.5. So they've just gone from 0.95% to 1.25%. So what does that practically mean for you? For basically, if you're in a variable rate mortgage, for every $100,000 that you've borrowed, your payment will increase by about $12 a month. So if you have a mortgage of $300,000, you can expect your mortgage payment to go up about $36 a month. We have ways to mitigate this. We talk about it up front with all of our clients about best practice with a variable rate mortgage is always, when you lock into that variable, consider what the fixed rate would be at the same time as you lock into the variable and make the fixed rate payment. And so now, as interest rates are rising, your payment doesn't change. The only thing that changes is that you're putting slightly less against the principal of your house every month. So even in this raising rate environment, there's ways to use variable to pay your mortgage off faster.
Okay. Well, I think if you have questions, Jaden is your man. Reach out to him and get your questions answered. So let's go to a recap of February. This is, I think, what a lot of people want to see. We left it till the end. Yeah. You had to watch till the end, or you could just fast forward if you're watching this later. And thank you for watching later if you're not on live. So here we go. Detached benchmark price rose to $596,400. That is $90,000 higher than February 2021. Think about that. If you had a $500,000 house last year, you're gaining $90,000. Is it time to think about selling? I don't know. That's up to you to figure out. After the first 2 months of the year, sales growth has been strongest in the 600 to a million price range, which is very interesting, right? And that makes sense. People are selling out of their $400,000, $500,000 homes. They're going to maybe move up, and that's where the pressure is going next, is from the 600 to a million. Semi-detached is rocking it right now from a price gain perspective. So months of supply, this is the amount of time it takes for the amount of inventory or listings to be sold, right? So that tells us our months of supply and whether we're in a buyer's or seller's market. It's 1 month of supply in semi-detached in February. That's the lowest it's been since 2006. 16% price gain, and 5% higher than last month. I mean, than January. I mean, we're talking now we're in March, but crazy stuff happening there. Here's some area wrap-ups. Airdrie is still going bonkers. 22% price gains, 490,800. Airdrie used to be the affordable option, and I still think to a large degree it is, but that is changing quickly. Cochrane, 21% price gains, 548.4, so significantly higher than Airdrie. So if you look at those two kind of next to each other, that's why I still think Airdrie is a good option for people. And Okotoks, we had only 15%. So that's kind of the wrap up, right? So still significant price gain. So if we go back to the Calgary slide here, so we had detached prices are up 90 grand. So that would be 2 times 5. Yeah, so it's almost 20%, 19%, but that's detached. Those were overall prices in Airdrie, Okotoks, and Cochrane. So think about that too. But yeah, craziness going on. I mean, I think despite the increase in listings we saw this week, we still don't have enough listings for the amount of buyers that we have out there. I was showing a property in Airdrie just this afternoon. It's already had a couple of offers. They're reviewing offers tomorrow night. I ran into a buddy of mine who's showing it as well. He's got buyers from Toronto he's showing on video. I got buyers from Winnipeg I'm showing on video. So that's what's going on in the market. I mean, I still think it's easily the best time to sell, despite the increase in inventory. I don't know that I would wait a whole long time. I have clients that are thinking about selling in Harvest Hills. And they're like, oh, well, we'll think about it. I'm like, I wouldn't wait too long. I wouldn't wait too long because, if we continually see those listings bump up, I mean, you have to think the demand has to slow down, right, Jaden?
You would think so. But I think when I see that those listings going up that you've shown this week, I'm seeing it in my business. I'm seeing my clients that have been waiting and that have been a bit more patient, not wanting to get into those large bidding wars, getting into places now, right? So right. Yeah, I totally agree with you, Mark. It's from a seller's perspective, obviously that's not my side of things, but
no, I'm asking for your opinion,
but everything I talked to you about, yeah, absolutely.
Yeah. Interesting stuff. So that's our wrap up for the week, for the month of February. We had thank you Andrew Brandsma from Your Life Covered for coming on. We're going to tag him in the post afterwards. As always, reach out to Jaden, reach out to myself. We're here for you and our wealth of referral partners that we have. So have a great week, everybody. Enjoy the rest of your week, and we will talk to you in 7 days.